Sup YouTube? I know it's been a hot minute since I last made a video. It's been about 3 months, but today I'm going to be talking about all the data that I've collected in the past 5 months I've been trading and what I've really figured out works with liquidity-based trading, or my strategy. So I want to talk about my top 5 confluences, them being number 1, a liquidity sweep, number 2, high time frame context, which is like a 4-hour manipulation, number 3, displacement, which is especially with trend. This displacement is really just like a big ass for value gap, like just context showing that there is momentum moving in this market, or that there is a ton of orders being placed to move in a certain direction with institutions. Just like really strong buy or sell power in their respective directions. Number 4, a retest of the key external liquidity levels, which is just key external liquidity levels are session highs and lows, or high time frame equal highs and lows. And number 5, a strong draw on liquidity after confirmation. So this means that, okay, we have confirmation on where the market wants to move today, and now we kind of know where it wants to go. Like we know where it's going to manipulate next, where it's going to try to absorb orders next. That is the next place it wants to go to. On the honorable mention list, I do have one more, but I wouldn't even really put support and resistance levels because they need context behind them to really work, while all of the other confluences are standalone strong. For support and resistance levels, you really need you need to understand how market is really structured that day, and honestly, I don't really use them unless I know that price has already been manipulated and distributed, and if it's going to retest a certain point, then that's when they're valid. But you can use them on session highs and lows, or high time frame equal highs and lows, and you kind of have a good idea whether it's going to like reverse or keep on going from that point on. And one thing I would like to say about all these confluences is that they're not standalone indicators. They work together to show when liquidity has been engineered and when displacement is likely to continue towards the next round liquidity. Basically, what I'm saying is you should not be looking at this in a single scoped kind of vision. You can't use just one of these and think that, or two of these and think that, okay, well, this should work. I know where price is going to go. No, it doesn't work like that. You kind of need to just be able to stack confluences, and that kind of raises the probability of the setup working. And these are all very strong like confluences, but they're not going to work if you don't have an understanding of market structure or context, which is why I wrote underneath, this is all under discretion of a trader. More experience provides better market reading. So you're not going to see a fucking fair value gap and decide to enter and then get stopped out immediately and chopped out because you decide to FOMO into a trade. It's just not going to work that way. Right, so a liquidity sweep. What is a liquidity sweep? A liquidity sweep is basically just when price decides to take out a session high or low. A liquidity sweep is basically just price entering an area where a lot of orders are already placed, and that kind of accumulates like a lot of fuel to move either in the same trending direction or to completely inverse it and reverse. So if we look at where this was a trade I took on the 2nd February 26th 2026, which is like 11 days ago. We can see that price already swept this London low, right? It accumulated a bunch more orders to push even lower. So this is a continuation liquidity sweep. I'm pretty sure this was a 5 minute. So if I go on the 1 minute, you can see that, okay, after sweeping this, price is going to try to retest, see if do we really want to go beyond this point with displacement? Do we have confirmation that this is going to be a reversal? What I do like about continuation trades with liquidity sweeps is that you can kind of just enter off of the 1 minute alone, because you're already being shown displacement. You're already being shown strong sell side power, for example, in this chart. So you don't exactly have to wait for a 5-minute closure or a 15-minute closure compared to like trading reversals or inverse value gaps, where you kind of need more confirmation because you don't want to get chopped out when order flow kind of takes a shift. What I like about this is that on the 1 minute, we already shown that price has taken these levels out and we are trending in that general direction, and it's failing to close above like this kind of London, what is this, London high, London low, whatever, I think this is London high, this London high level with displacement. With displacement means that it's just failing to close super strong or inverse this candle at all, or this candle at all. It's like it's just not doing it. It's wicking it out heavily, and that just shows you that we still have strong sell side power here. That is what a liquidity sweep is. It's just an absorption of orders where banks and institutions usually place their market orders. Honestly, there's a lot of controversy behind that, so I don't know if I should be saying banks and institutions, but what I do know through data and back-tested and forward-tested data is that around these key external session highs and lows, this is where you kind of decide like where do you want to enter. This is kind of like, because you don't want to enter like in the middle of all this. No, you're going to get chopped out. If you can enter on a place where a level is supported and you know that you're trading with trend and that there's heavy displacement, why would you think that it wouldn't run? You know what I mean? So on this trade specifically, I took a trade. I entered right here on top of this London level, and I closed right here on this Asia level, meaning that this is a draw on liquidity. And price could have reversed from right there, but that's why I closed from right there. So number 2, we have high time frame context or a 4-hour manipulation. I really like using this because it kind of tells you like what the bias is for the day. So for this trade specifically that I took on the 26th, we had these high time frame manipulations on the 4-hour on ES. We already see candles are fusing to close above these levels right here. And what we can kind of figure out with how these candles are wicking out right here is that price may not want to push forward any longer past this. So once you kind of figure that out and you go down to the 1 minute or the 5 minute, and you see that, okay, since prices want to push past this at all and we have strong draw on liquidity right here, we're going to end up sweeping this liquidity, and you know, we might get a retest and there might be an inverse, but there wasn't because it was a continuation. We're trading with trend, and as you can see right here in the 1 minute, it completely failed to close above and we ended up running. I actually made 1,500 on that day, just trading just straight session liquidity levels. So number 3, displacement, especially with trend. Displacement is just a big ass fair value gap. So this is today's market. Today is March 5th. I made $500 today. Displacement is where it's honestly just a big ass fair value gap. So we can see pre-market that it swept this London low, and as soon as the market started opening up, we completely bounced up and inverse fair value gap. That is displacement right there. That is an inverse fair value gap setup. This is the 5 minute, but if you go down to the 1 minute, you probably could have sniped an entry. If I were to enter this fair value gap right here, I would probably enter, let me see, I would probably enter right here. After I saw this displacement candle, price is displaced out right here. We got that retest failing to close below this London level, and now we're starting to rise up again. So if you're going to enter off an inverse fair value gap, you better have confirmation of displacement and that price really wants to move in that direction, and strong confirmation. So what happened here? A liquidity sweep happened. An inverse fair value gap happened, meaning that price kind of refused to push past this point on, meaning that this is probably going to inverse, and we also have strong draws on liquidity up here, meaning that, you know, this is actually a probable setup right here. And on top of that, we had a 4-hour manipulation at that level too. So from what I marked out this morning, at least. So we're going to take this trade, displaced out of that consolidation right here, manipulated it. Now I think it's just starting to distribute right here. So if I were to enter a trade right here, let's put in a buy order. Let's put TP at, let's look in the 1 hour. Oh fuck. Let's just say our TP is $1,000. With my setup, I usually only run $1,000 TP. And then we can have our stop loss right below where price was kind of consolidating. So if we run this, we're going to end up just taking full TP right there. Taking out these equal highs, stalling a little bit. And just, I don't know, chopping out, I guess, for the rest of the day. I didn't really take that move. I was actually in for shorts originally, but I exited that trade early, and then I ended up pausing on the day. But the point is, there was heavy displacement shown coming out of this level, and the retest showed that I didn't want to close below. You already gave you enough time to give you confirmation that this didn't want to push further down. So now it's just exploding up. That is what waiting for confirmation is, and that is what displacement is, especially with trend. But in case of inverse setups, you just got to give it time, or at least for special inverse setups, wait for a 5-minute or 15-minute candle closure. And if you don't get your entry, then fuck it, let it run. If you do, enter that shit. So that is displacement. Number 4, the retest of the key external liquidity levels, session highs and lows, or high time frame equal highs and lows. Again, this is just the retest of that level. So we can actually classify this as a retest because we displaced out of this consolidation where it refused to push down further down and displaced further down, meaning that we're probably not in for shorts. Once you see this big ass candle come out and that retest fail to reclaim the level that it originally swept, now being used as a support level for your bullish trades, that is kind of your confirmation that price is just going to skyrocket from here. So that is what a retest of the key external liquidity level is. It could be session highs and lows, or just a high time frame high and low. If I go back to a 4-hour, let's check it out right here. Okay, yeah, right here. We're seeing price sweep out this level right here. This is a 4-hour candle. And now there's a big like resistance level for this bearish candle, and now it's just reversing. If I go on to the next one, yeah, it's just reversing out. See, this is being used as a good support level, which is why I said that support and resistance levels they're good to use, but they're only good to use in context. Meaning that you have to have some sort of high time frame context or confirmation of displacement, like this candle right here, for the move specifically today. And number 5, a strong draw on liquidity after confirmation. So what is a strong? Where was a draw on liquidity here? We actually had an SMT divergence on NQ, which made that move run. On NQ, we decided to take out these London highs, and on ES we didn't. So that's why we reversed at this point, and we couldn't take out these London highs on ES, but we took it out on NQ. Which is another point. You don't necessarily need SMTs to take a trade, and I don't really use them as much, but they can show you where reversals may happen or where you might want to take a break-even trade. So SMT divergences, what they are, they're just levels, or they're really they're just different levels on where ES and NQ, like, okay, they're a pair, right? If NQ takes out London High and ES doesn't, that's an SMT divergence. Why? Because NQ decided to take it out, ES didn't. It's either we're going to rally up on ES or we're just going to start reversing, and what did we do? We ended up reversing. So it's just like when one chart lags behind the other. That is what an SMT divergence is, and one chart lagging behind the other. And if you see an SMT divergence and you're on the lagging chart, you might just want to go break even because your position might reverse, or better case scenario, if it just goes to hit UTP and both ES and NQ actually catch up to each other and sweep the same liquidity. So yeah, that is what an SMT divergence is. And a rule I have for SMT divergences is that you should go break even if you're on the lagging chart and the other pair decide to sweep. I was on ES today. If I decided to stay in this long where it actually took out this high, I would probably go break even, or honestly, I would actually probably already be in profit. I would already have hit my TP by now, but yeah, just go break even if you're in an SMT divergence and you see what's happening. That's like a good rule to have, because you don't want to lose money, you don't want to see profits drain. And just, I don't know, honestly, if I was up above like 1500, I would just take profit at that point, but go break even. If these things occur, go break even at an SMT divergence. Okay, that is an explanation of all five. One last thing I would like to kind of explain is support and resistance levels. This is a tricky one because they need to have context behind them. They need to have liquidity ran and market structures already kind of showing that, okay, this is probably going to work. So a good example of a support level would be right here. What day is that? I guess what's today. So I took this bearish run and it ended up inversing right here. But the nice thing about this is that on the 5-minute, it actually shows that this never even really closed above this level, which means that it was a good support level for the bearish trend, meaning that this London low acted as a support level to where price didn't want to push up any further off of this inverse. Yes, this inverse was a good move, but once it hit this level, this was a resistance level for the bullish move right here. So if you caught this bullish move, which I actually did today, it's pretty good. It was a pretty good move, and I end up entering late. I entered like right here, so I didn't take a full TP, but I ended it pretty good. This was used as a resistance level for this bullish candle. Why was it used at this level? Because this is where price had previously swept liquidity and displaced above. So if we decide to displace above again, then this level would have been ran through already, but it already was showing that, okay, well, it's kind of having a hard time pushing through. I probably would have just closed the trade already by now if it does that, or go break even, or because this is being used as a resistance level, you don't want your position being reversed, which at the end of the day did get reversed. So just keep that in mind. Watching for positions that are being ran, or a re-entry actually. If you want to enter for like another bearish dump after, you could have entered that because of the fact that this level actually held off pretty well. Another good example of that I have is right here. This was on 2/12/2026. As you can see, chart swept this London low right here. Decided to displace further down. That level got retested at the Asia low right here, and price refused to climb back above it. Just started wicking it out aggressively. I caught a huge move on NQ. Well, I wouldn't even say that's huge, but a decent size. I think that was maybe like $1,000 or something. But yeah, that's what support and resistance is. It's just previously swept key levels being session highs and lows, or high time frame equal highs and lows. And if you look at the 4-hour, you can also distinguish them among there. So I look at the 4-hour. This would be an equal high or low, or this would be an equal high or low, where price just decided to sweep it and cannot move any further. So these would be support levels for a rotation up, and then this will be a support level for a rotation down right here. And as we can see, in today's market, we could not push past this point and decide to rotate all the way down over here, and now we're reversing again. So they require context. And that's just like, that's just one of the things that you kind of have to be aware of, because you kind of want to have awareness in the market so you don't get stopped out, or you could even enter off of them. I don't really enter off of them, but unless I have context. I actually did enter off of one today though. I entered off of this one right here. I entered off of this retest of this London low level. Wait, no, I entered on the 1 minute. Because there was already displacement, you could enter off in 1 minute. You're kind of trading with trend at this point, so I entered right here. I don't know, actually, instead of using boxes, I'll just use this. End up entering right here. Stop at how many points did I stop? 8 points. Targeting 15. Caught all this right here. I ended up trailing my stop into profit because of the fact that we already saw this level right here, and I knew that shit was going to reverse. Or I didn't know, but there was a previous New York AM low right here, and it definitely could reverse, so I marked out that level. And we ended up doing reversing, and I took profit at this high right here. So that got me about, I don't know, like $650, and then I took the inverse after that, made another 500, ended the day with 1,100, but I took like 2 initial losses before that, so really I only ended like 545 on the day, which is okay. At least I made my money back. But yeah, everything that I've talked about here, it's in the market every day. You can find an A+ setup every single day. Okay, maybe not every day, but a majority of the time, if you are mindful of all of these things that go on in the market and have a vast majority and understanding of market structure. And this is my strategy. This is what I've been using for the past 3 months. This is what I figured out actually works. I don't have a mentor. I was never taught by anybody, but this is what I know works, and I have so much data backing this up. I have so many screenshots in this server that I made by myself. It's like, this is a journal fucking server. This isn't even like a public server. This is my journal right here. But I have like a whole entire year's worth of backtested data using these confluences and using the strategy, just revolving around liquidity. Yes, it is diverse and you can be flexible with it, but at the end of the day, it's all going to come under your discretion. So yes, it has a high win rate, but it is under your discretion whether market conditions really fit or not. Today was more choppy, and I definitely did not have a single clean move. Like, this is, for example, a clean move would be something like this. Okay, we get the retest, we displace with trend, we take a dub. We get the retest, we displace, we take the dub. This is more choppy for sure. This is something that, this is just liquidity rotating in between price all over again. But we were still able to take the dub today because there was still a draw on liquidity. There was still support and resistance level entries. And if price really wanted to reverse at this point, it would have. Or at this point, it would have. So we got that retest right here because this was a previous swept liquidity level that displaced up. So if price wanted to retest right here and hold as a support level, it would have, but it didn't. So that retest came through. We caught a little move right here, and then we caught the inverse after it swept that New York AM right here. And those were my 2 winning trades for the day. I have it all on my TikTok. I doubt anybody watches these YouTube videos, but I'm sure I'll be looking back one day at it and thinking like, I don't even know what I'll be thinking. I mean, I think I'm pretty solid right now, but whatever I can improve on, I will. But holy fuck, 25-minute video. That's the end of the video, and I'll catch you guys later.